Okay, questions? Yeah.
So on both of these companies, the key takeaway for me right now is the value catalyst. Well, how do you know that 5 years from now, John P. Sanfilippo or whatever is not going to be exactly wrong?
The problem with John B. Sanfilippo was the stock took off. It went public back about 10 years ago at around $12, $13. Went up to $50. $50. 5 times. Why? You had the Atkins diet. Suddenly everyone was eating nuts, kitting out the carbs, peak of the market stuff. You don't buy that stuff when it's then. Suddenly, people weren't, they said, the heck with the carbs, I'm going to eat them just the same. And then what happened was there was such a run on nuts. They're called tree nuts. I don't know where they get this, but tree nuts. And supply and demand. Adam Smith, nut prices went through the roof. And John B. Sanfilippo, in packaging all these nuts, almonds, cashews, Brazil nuts, etc., could only charge so much a package because you, the consumer, would say, I'm not spending $10 for a tiny little bag. So what happened was they couldn't pass on the cost, but the nuts were going up and they had a negative spread. Killed them. Stock plummeted from 50 right down to $10. We discover it, say, hey, look, they've got hidden real estate. They've got a great business model. We have to wait until the market will correct and more trees, peanut trees, will be planted. That's just happened. Nut prices are coming down, so you can see it on there. Supply and demand. So I tell you, listen to Dr. A. Listen to what he says, but then use that, bring it to the real world. We bought it when no one liked it. The stock's now 14.5, 15. They're just ramping up. They had a very good first quarter. And they've got some tax loss carry forwards as well, which I kind of like. Simple as that. Yeah.
Last year was obviously a pretty good year for markets, and your fundamental value fund was up 20%. But the fully managed fund, we know it's a very expensive, and we will have a lot of things and supplements, but the fully managed fund is actually down a little bit. I was wondering what happened.
Well, it's interesting. By the way, we have a very low coefficient of correlation with the TSX. We have no banks, no Bell, no TransCanada Pipe, no Bombardier, etc. To be perfectly frank with you, we had the same stocks in the fully managed as we had in the fundamental value, except I had 3 little sleepers in there. First one is a company called Hudbay Mining. Anyone ever hear of it? I was shown a block of stock at $2.75. And they had just done a financing at $4. No one wanted it. I figured we were the last guys on Bay Street to see it. So what I did, I called all my guys as a huddle, like a football huddle. I said, guys, you do this, you do this, you do this. And we analyzed it. We thought it was worth the $4 minimum. So we put that as our target. We did the work, and we cleaned out 5 institutions. I bought about 8% of the company at $2.75. Lo and behold, go no, that's the bottom of the market. And actually, after I bought it at $2.75, it went to, I think, $2.60. So they're rubbing salt in the wound. But nonetheless, we believed in it. And the bottom line is, once you buy it, it's yours. I mean, I couldn't sell to anyone. So I had to be very sure that we bought it at the right price and the company was fixable. Not to say it was broken. We had met with management after that, and it's kind of like the ready, shoot, aim, offense. You know, in football, you're ready, you shoot, and then you aim? Makes no sense. In my business, because there are 100 guys like me, I have to use all my street smarts to make as perfect a decision I can with imperfect information. I don't have enough. The more information you get, the higher the stock price will be. So you got to buy it with warts and pimples on it, and then hope to heck that it's actually good stuff. So we bought it. To make a long story short, it's now at $23. So it's a 10-bagger, as Mr. Lynch would call it. It was the first 10-bagger I've ever had in my life. I sold off part of it. I still have several, I think about 2.25 million shares. I'm playing with the house's money. I'm not a gambler, but I'm a speculator. I don't like Vegas because the odds are against me. But if I'm a good analyst, the odds are for me. Remember that. 9 out of 10 people don't know the ins and outs of companies. The other two stocks that did it for the portfolio were Lion Ore Mining, which we bought, and we were down for a while, but it's almost a triple for us. And lastly, a company called Eurozinc, Canadian company based in Portugal. And to make a long story short, I don't play penny mines, but they had 500 million shares, and it was at 60 cents. So what's the difference? It was 5 million shares at 60 bucks, or whether it's 500. It didn't bother me. So I bought over 21 million shares at 60 cents, and we sold the bulk of it between 150 and 3.25. Can I tell you where how I sold the last bunch, about 2-3 million shares? Anyone ever watch Crazy Jim Cramer? One night, he talked about Eurozinc. The stock went right through the roof. I woke up early that morning, went to the office, had all my orders lined up, and I gave it to him. Street smarts. I don't know if they teach you that in business school, but you got to do it. So those three stocks, quite often it will be a handful of stocks, because our fundamental value fund is 55 stocks. 5 stocks did it for us last year. We beat the index. It just so happened I thought they were too aggressive to put in a balanced fund. But I'll make it up. There'll be other things that will come in there. Remember, this is a marathon. It's not a sprint. And remember that all throughout your career. It's a marathon, not a sprint. Am I right? Short-term pain, long-term gain. I've taken a lot of heat at times. Clients bellyache, yell, scream. When it comes down to it, it's, hey, what have you done for me during the year? And if you have good numbers, all is forgotten. I remember one of my old mentors used to giggle about me. He said, you know, Irwin Michael, he'll buy a stock, he'll take 2 years of grief, and suddenly there's a takeover, and boom, it's all better. People forget about all the grief they gave me over that 2 years. Suddenly there's a takeover, it's all better. That's life. Question? Yeah.
George always tells us not to invest in commodities because they can't really create value. So what is it to you? What are your rules against investing? What's your criteria for investing?
George. Yeah. You know what? Look, he is right to a certain extent, because with commodities, I'll give you an example. You couldn't give away nickel at $5, $6, $7 a pound. It's 20 bucks a pound now. It's crazy. We bought a company called FNX Mining, the old Fort Knox. I made a lot of money in this thing. I mean, I like Terry McKibben who runs it, but it's had a big move. Same thing with Hudbay Mining. It's largely nickel. And I do like Peter Jones who runs it. He's a terrific manager. The problem is it's no longer trading on fundamental value. When I have to look at a price deck, I now have to put a higher value for nickel and for copper. And you're right. It's no longer trading on fundamentals. It's now on what price I put in. And in consequence, there is risk. So if there's anything we have to do, we buy early and I sell early. I can cry. A lot of stocks that I sold that doubled or tripled after I sold it. But I made my 50, I made my 75%. Thank you. Adios.
Yeah, I mean, what I tell them is that, you buy commodities when everybody hates them, not when everybody loves them. In the short term, you can make a lot of money, but in the long run, commodities.
Exactly. Question, yeah.
You had some stocks recently that you sold that have underperformed, like Hamilton and Sherman.
Yeah.
Can you describe what you learned from
Yeah.
those situations and what you were looking for?
Okay, Shermag is a very good example. The first time I bought it, I made a lot of money. I happen to like the president, Jeff Castleman, who runs a terrific shop. He's the guy that closed down the old Peerless carpet and got everyone full value for their money. When we bought Shermag, it was a Canadian company operating 3-4 facilities, largely in Quebec. They would manufacture furniture. Anyone hear of Shermag Furniture? My daughter has their furniture. It was great furniture. They also owned timber cutting rights in Quebec. They had a sawmill, and they had facilities in the state of Maine. All was well and good. Liked it. I even checked, because he exports a lot of his furniture to Florida. And I went into a couple of stores in Florida where we were vacationing and checked it out. Product is good, everyone liked it, etc. However, while all this was going on, 2 things happened. One, China. Just like the Japanese did after the Second World War and into the 1950s and 60s, they bulked up on quality control. I defy you to look at a Chinese-made product and differentiate, whether it's made in China or United States or Canada. They've really improved their quality control. In fact, I defy anyone. Look at what you're wearing. I don't think you're wearing anything made in Canada anymore. So China has done very well. It's interesting, I won't go off topic, but a Korean welder will make $60,000 a year. A comparable Chinese welder in welding will maybe earn, I don't know, $500 a month. So there's the law of comparative advantage. Okay, first thing. Second thing, what happened was, sometimes labor has to pay attention. They had 3 plants in Quebec. They decided to go on strike. They wanted more money. They go on strike. They went on strike, and it was a tough one because the company had to shut down. They wound down a lot of their inventory of bedroom furniture, etc. And the problem was, Jeff had to play hardball, Jeff Castleman, the president, and he told the unions, you don't go back to work quickly. I close it down, and I manufacture in China. Well, right away, 2 of the unions backed off. They signed an agreement. The other one said, no way, Jose. And they didn't. He shut down that facility. In the meantime, he was producing out of China, and suddenly he shut down the other 2 plants because they cannot compete. We cannot compete with the Chinese labor. To make a very long story short, he's taken some big write-offs, and this was no longer the company I originally bought. They've changed the rules of the game on me. This is not an indigenous Canadian company producing furniture. He's now an importer, distributor out of China. Any one of you can go there and contract with a facility to make furniture. Gone. Plus his balance sheet was deteriorating. I took my loss as a tax loss, and I ran it against my holding of some Hudbay mining, which I took a profit on. So that'll happen. Same thing with Handelman. We bought Handelman, and if you go into our website, Value Investigator, you'll see why we sold it, and I'll tell you exactly how what we explained to people. We bought Handelman as a distributor of CDs and all sorts of musical, tapes, whatever, when it was debt-free. Management came in and they bought into a British company, and they thought they could integrate it. They did not. Debt went up. Suddenly, pirating and YouTube and everything else, all the stuff you can grab off the internet, is killing them. They were Walmart's largest supplier of CDs and everything. Walmart uses them. They tend to use them. You see these big bins. You buy them for a couple of bucks. And Walmart has had to ship back a lot of stuff because maybe they're not selling them. Because you people are not buying as many CDs. So, again, rules of the game changed on us. Out of 10 investments, I fully expect to lose on 2 or 3. Because why I bought them, the reason, has changed. Not my fault. Just so happened it's there. So you have to leave a little bit of wiggle room in your portfolio to cover stocks like that. Yes, sir.
It's good about 25% of your North American value funds in small cap energy stocks.
Yeah.
I was wondering what your commodity price outlook is for the next couple of years.
I think generally commodity prices, oil and gas, are cheap. It's not that there's less of it. It's just more expensive. And even with our tar sands in Canada, I met with Matthew Simmons, who wrote this book, on oil and gas, and he was telling me that the biggest problem with Canadians on our tar sands is we use so much natural gas to extract the oil from the sand. It's there. So the problem is we've used up all of the $20 and $30 a barrel oil. And now it's going to be more expensive. I mean, there's all the reason for oil to go back to 30 or 40 bucks right now. We're now in the shoulder season of oil and gas usage. It's too early for you to be doing all your summertime driving in your car. You're toning down your heating in your house, because it's probably going to be 10 or 12 degrees today. And shoulder season. So we've got to hope for a hot summer, lots of air conditioning to use this. But on balance, there is plenty of oil and gas, but it's much more expensive. And by the way, we're not only looking there, we're doing a lot of work in the North Sea. You need safe supply of oil and gas. We can no longer depend upon Nigeria, where there's a lot of insurrection in the north. Saudi Arabia, they're a swing. You can't even depend upon Venezuela. You've got Chavez now, who's doing a lot of interesting things that aren't good for the marketplace. Yes?
I have a few quick questions. What's your average hold time for a stock?
Average hold time can vary from a week, and that's only because, it's like I hit the mother lode. I buy a stock at 10, and a week later something happens, it's at 15, and that was my target, and if nothing changes, I'm gone. I'm very disciplined. But generally, my average hold is between 12 to 18 months, 12 months to 18 months, and I have a 50% targeted rate of return. Sometimes I sell before, sometimes less. We just sold Legacy Hotel REIT. We had that for about a year and a half. We bought it at 7, sold it at 10.70. Don't know it's at 13, but they're now. If you look at the business model, it's now factoring in a cap rate of maybe like 2 or 3%, which is insane. People are now buying real estate using a 0 or 2 or 3% cap rate, expecting to make it all back in NAV. You can't. The hotel business, which I happen to love, I love hotels and restaurants. Hotel business is infamous for being cyclical. It's like this. Remember we had SARS? Forget about hotels. They're all dying. Not to say I'm wishing upon it, but it's very, very cyclical. If it happens again, I'll buy more hotels.
Another question. I know you guys do a lot of your own research, and you don't like a lot of research that comes from other places, but are there any specific analysts or brokerage houses whose research you do trust and that you do find really appealing?
Yes. George told me to make a speech, but I'm not going to tell you everything. I got to leave a little bit. Huh? That's another rule. If you find the secret to your success, just tell a little bit. You show just a little bit of skin, not at all.
Sorry.
Yeah, go ahead.
When you're looking at an oil and gas company, what metrics do you use to decide it's undervalued?
We use a lot of things. We look at cash flow. We look at management. We look at net asset value. Like right now, we're buying a North Sea company with no cash flow. They're not in production. But I look ahead. I'm looking 12 to 18 months ahead. And I'm willing to be offside 10 or 20% because I see a triple as long as I'm patient. So I'm going to look. But I also like the management. And so it varies. So it's a lot of things. It's hard because a guy will come in, manager, both male or female, they'll come into your office. They're all dolled up, and they speak well. I look for things if they have too much jewelry. And as they say, you look at what type of car they're driving. I like a guy with a beat-up car. But the bottom line is, a lot of it is instinct. You don't teach your class how to evaluate people because it's impossible. You learn the hard way. You fool me once, it's my problem. Fool me twice, So the bottom line is very difficult discipline to analyze whether the guy is giving you a crap, BS. That is the toughest thing. But I always check into their background. I'll Google someone. Guy comes in, I'll Google him right away. What's his background? And it's amazing. Some guys have gone bankrupt and they've screwed everyone in the world, and they have the audacity to come in like nothing happened. But if you bother to Google him or you do some research or ask around, I always ask, give me a reference or two. And I find out if the guy really is kosher about it. If he isn't, gone. I mean, I've had guys walk in, and the moment I realized who they were, I excused myself, and without being too impolite, I said, meeting is over. I didn't want to waste my time. Time is precious. Yes?
Does the presence of smart money in the stock influence your buy and sell decisions? Like, do you ever contact other investors and say, I buy that stock, I want that much down, why buy it?
Okay, so you said the first question, because I didn't really hear it.
Does the presence of smart money, for instance, other value investors that have bought pieces of stock?
It bothers me. I went to a dog and pony show yesterday. I saw all the hotshot hedge fund managers at the meeting, and I backed off because they're probably looking for a quick fix. I tend to look at companies that are a little off the beaten track. And, we bought John B. Sanfilippo. No one liked it. It was on its butt. And that's when you tend to buy things, when everyone hates it. Maximum discomfort out there. Do I network with people? Yes. I know a lot of my competitors. Either I worked with them early in my career, or else I see them at Toronto Society Financial Analyst meetings or various things. I mean, you know, it's not a war, but, you know, you don't tell them all your secrets. But you know, there are a few things that you can work with them on. You want to be independent. You want to have your own style. So one man's poison is another man's meat. What I may like, people may think it's garbage. I'll let you in a little one if I have time for it. I bought a company out of Florida called Cruzan International, C-R-U-Z-A-N. Anyone ever hear of it? They make rum. And it's about 2 years ago, I was taking the subway home in Toronto, and I had nothing to do, and I happened to have a spare annual report. It was for the company. And you tend to doze on the subway, you know, the click, click, click of the wheels. And I looked at this company. It made rum. It was the fastest growing rum producer in the Western Hemisphere. As you know, Bacardi is peaked. It's, you know, it's very mature. This company was growing at 25% a year, compounded rate of growth. I looked at the company and I discovered a number of things. The stock was trading at around $11.50, had a book value of around 13, 14, but they were losing money. Analyze a little further. They were losing money because they were growing so quickly they had to constantly spend money for marketing to develop their distribution. That was the first thing. So I could rationalize why they were losing money. Second thing was I discovered they had 138 acres of land. Now land to me is gold because I know Florida quite well. They had land in Florida but also in the U.S. Virgin Islands. A lot of this land was put into place in the 1960s and 70s. So I know on their books it was probably worth a lot more, you know, market value. My wife and I were down in Fort Lauderdale. I had her drive me up to West Palm Beach. I met with management for about 2 hours. I was astounded. Great distribution, great product. So I bought it, just under 5%. My target was $20. It did nothing. In fact, it went down about a buck and a half. And again, still losing money. About 10 months later, the stock was halted because the company out of Sweden called Absolut, you know, they have Absolut vodka, they bought it out for $28.37. Why? It was cheaper for them to buy an existing company to maybe overpay in the marketplace because to start this company from scratch, to develop a brand, distribution, to spend all the money for marketing, cost them too much. And that's how we sold out. This is another thing I want to bring to your attention. I believe the stock market today is one of the last major asset classes, is one of the cheapest markets around. Gold has already moved, silver has moved, paintings, Ming dynasty vases, etc. So stock market, if you do your homework, it's there. It's there for anyone's picking. Doesn't know your name, doesn't know your profession. All you need is stamina and diligence. Anyway, thank you.
I want to ask the two quick last questions, okay? What was the biggest mistake you made in investing, and what is the most important thing you learned during your investment career?
There are a lot of things. You know, you make a lot of mistakes in life. I can't remember one. I can remember a whole bunch. In terms of investing, I think the biggest mistake we all make, and I'm as guilty as the next, in not investing in yourself, not believing in yourself. And I should have done this earlier in my career as opposed to staying too long and sticking with my style. I've made a number of investment mistakes. SureMag is one, but I can't, you know, there are a whole bunch. And your second question?
The most important thing you learned in your career?
Humility. If you're long a stock in a down market, I mean, and you can't sell. Like people ask me, why didn't you sell SureMag earlier? I couldn't. There was no bid. No bid. Okay? And, you know, we talked about shorting stocks. We both had the same experience. Imagine you're short a stock and it's going through the roof. You're sweating. You can't sleep at night. Your wife or your husband asks you, like, what's wrong? You can't get out. I mean, humility. You have to fess up at times. I've made a mistake. I made a mistake in SureMag. I made a mistake in Handelman. It wasn't my fault. I just took it. Fortunately, though, there were only 2 out of maybe 10 stocks, and I more than made up with it. And that's why That's why you have a portfolio of stocks. When I went to school, they had this theory, 11 stocks makes your portfolio efficient. Baloney. I couldn't sleep at night with 11 stocks. I have 50, 55, and a $900 million portfolio. And I may add another 5 if, as, and when we get to $1 billion and change. The other thing is, remember in life, there's no crime to make a mistake. As I tell my guys, the crime is if you've made a mistake and you don't correct it right away. And that is why they put erasers at the end of pencils, for you to make mistakes. And it's normal. But you just have to keep it up.